Hi, everyone. Thanks for joining me this evening or afternoon or night, depending where you are in the world. And today I'm going to talk about three entries that actually seem to work. So let's kind of jump into it. So, got about 40 minutes. Don't know if I'll have time for questions. If I do, I'll take them at the end just to keep things going. So, I'm going to give you three algo type entries that seem to be working in today's market in some different futures markets. I'll give you an idea how to test these things on your own because that's going to be really important. And then I'm also going to give you a proven strategy development framework for things if you want to develop your own strategies. Not selling you anything, so there's no special offer or nothing like that. It's just information. At the very end, there'll be a link if you want to sign up for an email list, but got nothing to sell you today. All right. So let's start out as disclaimer. Past performance is not indicative of future results. Don't trade with money you can't afford to lose. You know, you've probably seen this 100 times, but you know, of all the government disclaimers I've ever seen, this is one of the best ones because this is actually pretty true. You know, a lot of them are just people just click through. Oh yeah, I just accept that. But this one's actually worth reading and understanding. So be careful because trading's tough. All right. So for those of you who might not know me, I'm a three-time trading contest trophy winner, and that's a real money contest that was a year long. And in each of those years, I got over 100% annual return. Finished in first place once, second place twice. So that's just some of my verified background. You know, a lot of people claim to be traders, and you know, we'll never tell you about any real results, but those are real results. And if you go to Amazon, you'll actually see now I've written, over the past 5 years, I've written 4 books. All of them at one time or another have been on the bestseller list at Amazon. The one down in the sort of lower right, Entry and Exit Confessions of a Champion Trader, is actually still the #1 bestseller over in futures trading, and it's been there for well over for almost a year now, I think. So in case you're interested, check out those books. It gives you some background on how I trade and how I do things. So, you know, final thing about me, I've taught a lot of trading contest trophy winners, 6 of them at this point, who've either finished in first place, second place, third place, including the 2016 and 2017 winners. And students who I teach have gone on to create quite a few good strategies on their own. So not only can I trade myself, I've also been able to teach people trading and how to actually develop strategies. Okay, so that's enough about me, probably too much for those of you who know me. We're talking about entries today, right? Well, a lot of people like entries, you know, because it's the one time where you can really tell the market what you want to do, meaning, hey, I'm not going to enter until this, and this happen, and then I'm going to enter. Okay, so you kind of feel in control, which is really nice. The problem is it's only one piece of the trading puzzle, right? You've got entries, exits, diversification, money management, psychology, position sizing. There's a whole bunch of stuff that goes into being a good trader. So obviously I don't have time today to talk about all those things, but I'm going to focus on entries. Just realize there is a lot out there that you've got to keep in mind. You know, a lot of people tend to think it's all about psychology, and they ignore all these other things, and that's not right. Okay, there's some people who think entries are, that's all that matters, and don't worry about anything else. That's not right. You know, it's all those things put together that make a good trader. So that's just something to keep in mind. A lot of people kind of get messed up with not realizing that. So I'm going to talk about entries, but entries are only part of the puzzle. So first, a few mistakes regarding entries. Like I said, a lot of traders only focus on entries, and that's because entries are the most exciting part. You know, it's the part you get to determine. Once you're in a trade, you know, you can't tell the market to go a certain way. You have to live with and react to what it does, right? Or your algo has to react to what it does. But on the entry side, hey, unless the market does some certain things, you're not even getting in. So don't focus on just the entries. That's just bad, okay? The whole idea with being a good trader, good algo trader, an algo trader is just a rule-based trader. I just, you know, if I can't program it, I'm not going to trade it. So I have to be able to program my rules. You need to take entries and then develop a strategy properly. And that kind of leads to the second mistake. Most people never test their entries. I found this was some trading book, free trading book, some knucklehead was giving away a while back. And I've covered up most of the info for this particular vendor, but you know, he had this whole argument of basically telling you when to buy. Okay, and you know, he has a pullback and it's above a moving average, blah blah blah. But he had no proof. He had no proof at all. He just said, hey, this works, go follow it. And what you should never do is believe anything anybody tells you, including me. You test it. You test it yourself. You verify it. You can be conned by all sorts of people who will say, oh yeah, these pullbacks work, or you know, an inside bar after an outside bar, ooh, if it's a breakout, that'll work good. Okay, that's your theory. Show me some numbers. Show me that it works, right? Is there anything wrong in asking for that? No. So in this case, okay, well, maybe this is a great entry, okay, but I'm surely not going to trade it until I test it and verify it. I'm not going to take this person's word for it just because he says it works. I'm going to verify it works. And that's the whole key with algo trading. That's the whole real big benefit of it, is you test it and see if it's worked historically. If it doesn't work, it's probably not going to work going forward, right? It hasn't worked the past 5 or 10 years. Why would you think it's going to work the next 6 months? It probably won't. The flip side is, just because you have a good back test, that's no guarantee it's going to work either. So, you know, it's kind of a catch-22 a little bit. You want to rely on the back test to give you some confidence, but you don't want to overly rely on it. So that's key. But most people never test at all, okay? And so my response to that is, where's the proof? So anybody shows you anything, any kind of candlestick pattern, or, you know, some kind of secret indicator, whatever, ask for the proof. Show me a back test that actually worked. And it'll be interesting what you hear, because most of the time you'll hear all kinds of excuses of why you can't back test the method or whatever. And it's usually what I've seen is people who don't back test don't want to, because they don't want to know the answer, because the answer is it doesn't work. And frankly, folks, that's true for 90%, probably more than 90% of things you test. Almost nothing works, because slippage and commission costs just grind away, and you've got to overcome that. And most things lose money. Most approaches, most little patterns lose money. You know, there's books out there where people have tested candlesticks to death, and the conclusion is most candlestick patterns don't work. Yet people will still look at them. Now, it doesn't mean none of them work, and it doesn't mean they never work. You might find markets that certain patterns work on. I know I have, but the key is you've got to test it. So always ask, where's the proof? And if you're not asking that, that's a big mistake in your trading. If you're just going on blind faith, that's a big one. Okay, so then you say, okay, Kevin, I understand. I'm going to test. Well, there's your third mistake. Most people test strategies incorrectly. Here's what they do. They take their inputs, their entries, their exits, you know, whatever rules they have, and they slap together with a bunch of historical data, you know, maybe 4 years, maybe 10 years, maybe 1 year. Some people do it on tick data, so then they'll do a couple months and think that's adequate. And trust me, there are about 1,000 different ways to test incorrectly. I'm just showing you one here. But then they take all those rules and everything and throw them in this big optimization engine. You know, it's most trading platforms have it, where you can optimize every single input. You know, I'm going to look at a breakout length of 2 to 100 bars at every bar and see how it works. So they run thousands, millions of iterations. You know, I've seen people do that. I've seen people complain that they need to buy faster computers because their back tests are taking all weekend because they've got millions of runs. It blows my mind because it's just totally not the right way to do things. But they run it through the back test. They get those best parameters, however you define it, whether it's max net profit or lowest drawdown, whatever it is. It's just optimized. But they take that and start trading. And if you want to route to the trading poorhouse, you know, one route is to never test anything and just kind of take somebody's word that a pattern or something works. Another route is to do this, to optimize to death and then start trading the best case. Don't do this. Way back when, maybe in the 80s, when TradeStation first came out, and it was called System Writer or Omega Research. Maybe this kind of thing worked because nobody knew about it, but I don't even know if it worked back then, where you just optimize and trade the best. Doesn't work anymore, I'll tell you that. Simple strategy development no longer works. You've got to do something a little more complicated. And I'll show you what I do a little bit later, but just keep that in mind as you're thinking about how you're going to trade. If you want to do any kind of rule-based algo trading, it's called mechanical trading, system trading, rule-based trading, whatever you want to call it, make sure you test properly. So watch out for those mistakes. All right, so with that, I just wanted to kind of set the stage for what I'm going to talk about today. These entries are taken from 2 different books. The one on the left is actually free if you go to my website, which you'll get a link at the end. If you just go to my website, KG Trading Systems, and click on free, there'll be a link where you can just sign up for an email list, and then you'll immediately get the book. The book on the right's the one that's the bestseller in futures right now over at Amazon. So I've taken these entries from these books, and I'm going to show you everything in TradeStation code, but you can also get the code in multi-charts trade format, which is basically the same as TradeStation, and you can also get Ninja Trader. I give you the code to that too. So don't worry if you don't have time to write all these down and that kind of thing. You'll be able to get them in the book. All right, so the first one is from that Confessions book That's the paid book. I think the Kindle version is $2.99, so it's not a big investment. It's entry number 38, and then I went and modified it a little bit. I don't recall what I modified. I think I removed some of the variables, and but it's based on something called the awesome oscillator. You've probably seen that around. I forget who invented it, but it's pretty typical actually of how I develop systems. I'll find something that's out there, and I'll actually take it and modify it and kind of fit it to my own needs and play around with it. If you play around with strategies the right way, you can actually make them better without overfitting or curve fitting, because that's obviously a big issue when you start looking at strategies. So this is basically all the code. You notice I don't have like a stop loss in here. I don't have a profit target. You might say, oh my gosh, you need those things. Well, okay, you can go and put them in there. I'm just keeping it kind of simple. So it's just based on this awesome oscillator. And I decided to use crude oil daily bars. And what I did initially, before I did the results I'm going to show you, I just tested over a limited time period. That's just part of my process. And I do some iteration. And if the strategy looks good over a range of some of the variables, then I kind of make the conclusion that, hey, I might have something here that might work in a strategy. Doesn't necessarily mean it's going to be one I'm going to trade tomorrow. It still needs some work, but you got to start somewhere, right? So what I like to do is do some initial testing and then kind of filter out some of the things that don't work. And like I said, most things will not work. And if you filter them out, you're left with some good ones that you can go on and start doing some of the other testing that I do. So here's a chart on the left of just some sample trades. And you can see, not cherry picking anything. Actually, I think what I'm showing, 1, 2, 3, 4, I'm showing, this is my sample chart. I'm showing 5 losses and 1 win. Yeah, you could say, oh, that's an awful strategy. It's 3 losses in a row. Well, okay, I get you. But when you look over a long period, you'll see it's pretty profitable over a wide range of variable ranges. Some of those are covered up, but it passes what I call a quote unquote robustness test, because I want to see that changing the variables still leads to profit. You know, if I saw one iteration show profit and nothing else did, well, I'd know that one is not going to be a good strategy. You want to show a range and you want it to be profitable. So my conclusion, just looking at that initial testing, is, hey, maybe there's something there. It's probably worth further testing, further analysis. And that's the key. So this entry, yeah, hey, it's pretty good, but can I make a strategy out of it? Well, that might take a little bit. So here's just an example. This isn't optimized. This isn't the best case. This is just one of the cases in that iteration. This is actually 10 years. It's pretty good for a start. You know, it's got a pretty horrendous drawdown right around trade 30 to 50. But it is making new highs. It's in a drawdown now, but you know, it's what I would consider decent. And that's one of the traps people fall into, is a lot of times they'll look for something that looks great. You know, that, oh yeah, this perfect. Watch out for that, because when you look for something perfect, what you're going to do is you're going to end up over testing and you're going to create a better back test. And There's actually an article on my website that talks about building a better backtest and why you shouldn't do it. Because any backtest you can make better, right? You just keep adding filters, change ranges, do a lot of things. That doesn't translate to real-time trading. Or if it does, it's so rare. Most of the time it's not transferable at all. It actually makes things worse. So if you make a better backtest, it usually leads to worse real-time performance. And most people don't get that. Trust me, I get it, because I've done enough of that in years past that I've paid the price for that. So don't do that. So that's the sample performance for that first entry. An awesome oscillator, works pretty good. Okay, so now entry number 2, you get it from the free book on my website. This is entry number 4. This is super simple. Buy next bar at the highest high on a stop, lowest low. So it's just a simple breakout, right? Nothing else to it. And you might say, oh, this is too simple. You know, breakouts don't work anymore. 80% of breakouts fail. Okay. You know, I'm not going to argue with that. But the point is, you can still get systems like this, very simple systems, to work in real markets. And you might think, well, hey, maybe it's better to have complicated ones with 5 different exits and multiple entries and scaling in and out of contracts and all that kind of stuff. And again, I'm sure you could create a back test that shows all that. But when you're trying to fit a system to future data, future unseen data, simple usually works out to be better. And again, it's something that's not very evident, not very intuitive to most people, especially if you're a science background type person, an engineer, or an accounting numbers type person. The people who struggle with this kind of concept are usually the numbers people, because in school, and probably most of their careers, there's equations to handle things, right? You solve a system of equations, or you walk through this process. I did a summer internship at NASA, and I had to create a computer program that would simulate rocket trajectories, okay? And there's certain laws of physics that you just have to program. And, you know, that's the way it works. But not so with trading. You don't have to make complicated models to predict behavior or to kind of model behavior. And that's where a lot of people get messed up. So this is a very simple breakout strategy, but as you'll see, it does tend to work. Now, it's not going to work on every market or every bar size. And that's part of what you've got to find, is where it works. Okay. So on this one, I use daily gold bars. I initially tested over the last 2 years, and then I went from there. And again, if I tested over a range of different look back periods for that breakout and it works, hey, maybe there's something there. So in this case, again, you can see the last couple trades. So it tends to stay in trades a little longer, okay, because I'm using daily bars. And all I'm showing you here, I think I did 10 to 20 bars for a breakout, and almost all values except for like 10 and 11 are profitable. 10's profitable barely, 11's not, but everything else is. So it shows some robustness that, hey, this mid-range, what I would call mid-range, 10 to 20 bars, you know, that's on a daily basis, that's basically 2 weeks to a month. You know, that's fairly medium term. I would say 0 to 5 bars is probably short term. And then if you get up around 50 bars, that's a long-term breakout. And maybe those work better. I don't know. I didn't test them for this. That would be something else you could test, because you are, you know, what you shouldn't do probably is test from 2 to 50 bars, because you're going to get areas that look good, but other areas that don't. And you really shouldn't combine a 2-bar breakout to a 50-bar breakout, because they're totally different philosophies of trading, right? One is super short term, a 2-day high you buy or sell, versus a 50-bar, which is almost 2 months, right? Or it is 2 months. It's more than 2 months. So you got to watch out for that kind of thing. But 10 to 20 is a pretty big range, and it makes money. So again, I didn't take the best case here. I took the 4th best case and just plotted it. The interesting thing here that might kind of scare you a little bit is the first 35 or so bars or trades, nice steep slope, right? And then slope kind of levels out. It's still making new highs, but all of a sudden the slope changed. Why did it change? Well, maybe other people caught on to this method and people started using the breakout, and they started front running the breakout. So they started to say, well, hey, everybody's getting in at 10-bar breakout, so I'm going to get in at the 9-bar breakout. I'm going to get in a little bit earlier. Well, who knows? The market sometimes changes. There could be big players in the market that all of a sudden leave or come in and add size or take away size, and they could be moving it too. You don't know, but what you do know is that the performance lately hasn't been as good. And so again, this is a good entry. You can see it works over a 10-year period. So you can't say, hey, this is a terrible entry. But at the same time, there's still more to do to actually prove it's a good system before it's a system you'd actually want to trade. So hopefully I'm kind of making that point clear here. Okay, so let's move on. Entry number 3. And this one's another one I got from somewhere that I probably modified a bit. I don't know. Again, that's how I find a lot of my ideas. I just find things and try them out and test them. So again, remember I showed you that Superman chart in the beginning of the book, from a book at the beginning of my presentation. I said, where's the proof? That would be something I would probably take and try to code into rules and then test. And then I'd know if it worked or not. So I do a lot of that. And most people who create algos, that's what they do. You don't have to invent your own theory of the markets. You can take what a lot of other people have done and just try to apply it. So this is what it does is it creates a base based on the highest high and the lowest low, and that's kind of like a level or a platform, and then it buys at a certain ATR, average to range multiple above that. And then it also has a momentum type thing at the beginning, and that might have been the thing I added. I'm not sure, but I'm a big fan of this type of thing. If the close is greater than the close 10 bars ago, well, you got some momentum going in the up direction. So that's a lot of times thing to use. So let me just erase that. Apologize for this. Again, fairly simple. This time I took 4-hour S&P bars because a lot of people like these intraday bar sizes. Now, this isn't an intraday system. This is a swing system that lasts for a few days to weeks. You could always make it a swing system if it works, or you can make it an intraday system if it works. It all depends what you're looking for. And again, I test over 2 years, which is my initial testing. And if it's profitable, hey, maybe there's something there. And there's the 10-year results. Looks good over a wide range of variables. And again, it's just telling me, hey, wake up. This entry might have something there. Now I do test this with slippage and commission built in, so um, that's important, because what you will notice is most strategies, when you don't account for slippage and commission, most strategies will be profitable. But once you add in slippage and commission, they're going to beat you down. And as much as people would like to say slippage isn't an issue and doesn't bother them, slippage affects us all. You know, the only way to avoid slippage really is limit orders, and always using limit orders for entry and exit. Then you never have to pay slippage, but you're going to miss a lot of trades because your price is going to be hit. It's not going to be exceeded. You're not going to get filled, and that might be worse. I don't know. Yeah, again, you know, that's me telling you something. What would you do in this case? You would test it, right? Test the system with market orders versus limit orders. See if it works. Okay, here's a 10-year test for this. Pretty nice, you know, upward to the right. It's got some significant drawdowns to it. And again, it's not supposed to look perfect. If you're going for perfection, you don't want to do it, okay? You know, I guarantee you, if I spend enough time on this, I could make a perfectly straight line. And I could also guarantee as soon as I was done making that straight line, which would look like this, I'd go live and it would probably do this. Maybe it would do this, but almost no chance of it continuing like that. So keep that in mind as you're looking at any kind of system, really, but especially with algo things you trade. Okay. So I keep saying, hey, you know, this is a start. These are good entries, but you got to do more. And that's certainly the case. All these entries are very good, but you've got to do extra testing. What other kind of extra testing you have to do? Well, I've just listed some of the things I do. I test to see if my entry has an edge. It's an entry edge test. I test exits sometimes with an enhanced exit. I do walk forward testing, Monte Carlo, random simulation. I do live evaluation testing. I do correlation testing to make sure it's not like all my other strategies and that I'm not just setting myself up for some big fall when everything goes in the wrong direction. So there's a lot more testing you have to do than just what I showed you. But what I showed you is a good start. You could actually take what I've given and kind of run through it, and you might very well come up with a strategy that you'd feel comfortable with trading based on those entries. But you always have to test more. And I know I sound like a broken record. You say, oh, you keep talking about testing and testing. That's the key to successful algo trading, is evaluating what you're going to be trading and test it. There's really no way around it. I mean, yeah, there's a way around it. It's just never to test, right? But does it work? You know, how do you have any confidence that what you're doing is going to work? You know, you can't just listen to somebody and they tell you, oh, hey, when you see a little trend, you know, that's wait for a little pullback and that's the time to get in. You can't rely on just somebody's off the cuff observation. You got to test it. And maybe those pullbacks do work when you define them a certain way, but I'd rather know that, right? Most people who algo trade, that's how they tend to play it. They tend to want to test things. Okay. So when it comes down to it, it's all about the process. You know, that, like I said, the entries are important, but the testing process is what will be your key to success. Knowing how to test a strategy and evaluate it is going to be the key. You know, if you take nothing else from this 40 minutes we have together, don't do what most retail trading software has you do, which is you open up a chart, you insert a strategy, and then you pop open the strategy window, and lo and behold, it has a bunch of inputs, and it makes it so easy to optimize those inputs. And then you pick a range for all those and hit optimize, and you get the best result. Don't do that. That is like the worst thing to do. It's also the easiest. And you know, the trading software, hey, they want to make it easier for you to use, right? Well, the other thing that does is it always shows you the best possible results, and people get all excited about it. Gotta watch out for that. So you gotta know how to test. This is a process I use. It's a trademark process. It's called a strategy factory. I go from goals all the way to real money operation, and where we're focused today is really right in this range. You know, I was showing you some ideas, and then I was doing some limited testing that was working, but there was certainly a whole bunch of other steps that I just didn't have time to get into that you need to really do this. And you know, you might say, oh, come on, this is just the way you do it. You don't need to do this. Well, you know, the approach I use works. It's worked for me, my own strategies. It's worked for a bunch of other trading contest trophy winners who've used this approach, or you know, they might take it and modify it. It's worked for people, students I've worked with. Do you have to use this? No. You know, there's other ways to do it. If you want to do this on your own, here's what you do. Create about 50 to 100 strategies. You want a nice amount, you know, to get some statistics with a consistent process. Develop them all the same, test them all the same. Watch them then in real time for a couple of years. See how they perform. Are they making money? If they're not, well, maybe your process is messed up. Go back and change your process. Do something different. And then create 50 more strategies and watch those for a few years. And you keep doing that until you either turn profitable or you just give up. You might say, well, this is crazy. Who would do this? Well, this is what I did. Because, you know, this method I used just didn't fall in my lap. I had to create it over time. And I created it by screwing up and building bad strategies and having bad things in my method. And eventually, my method got better and better. So you could certainly do this on your own. Follow those steps, get enough strategies, just correct where you see yourself making mistakes. You'll get it, no problem. Or you'll give up. That's what most people do. And they say, this is too hard. I'm just going to follow this guru who says trade pullbacks because he looks successful. Okay, well, see how that works out. Anyhow, sum it all up. I gave you the awesome oscillator, which was working with crude, a simple breakout, which was working with gold, and a momentum-based platform breakout, which was working with ES. Use those entries to create your own strategies. Just make sure you have a proven development approach. And if you want to learn more, I'm not going to email you afterwards. You will never hear from me again if you don't want to hear from me. But if you want to hear from me, if you want to watch my videos, read my articles, go to kjtradingsystems.com/free, sign up. Free, lots of free stuff there. And with that, I'll turn it over to the festival guys, and thanks for watching, everyone.